Join me as I dive into the world of ethical investing to see if it's really worth the hype. With the growing awareness of social and environmental issues, more and more investors are looking for ways to make a positive impact with their money. Ethical investing, also known as socially responsible investing, has become a buzzword in the financial industry. But what does it really mean, and is it truly worth the hype? One of the biggest misconceptions about ethical investing is that it's some kind of charity work. People often think that by investing ethically, they'll have to sacrifice their returns in favor of doing good. But that's not necessarily the case. Another common misconception is that ethical investing is only for the ultra-rich or institutional investors. However, with the rise of robo-advisors and impact investing platforms, it's become more accessible to individual investors. Some critics argue that ethical investing is too vague, and that it's hard to measure its actual impact. They claim that it's just a marketing gimmick to attract millennial investors who want to feel good about their money. Others say that ethical investing is too restrictive, limiting the potential for growth by excluding certain industries or companies. Despite these challenges, many investors are drawn to ethical investing because they want their money to align with their values. They believe that by investing in companies that prioritize social and environmental responsibility, they can generate long-term returns while also making a positive difference. ESG criteria, which stands for environmental, social, and governance, is one of the most common approaches to ethical investing. It involves evaluating companies based on their performance in these areas and selecting those that meet certain standards. Impact investing, on the other hand, focuses on generating measurable social or environmental impact alongside financial returns. Shareholder advocacy is another approach, where investors use their influence to push companies to adopt more socially responsible practices. Take, for example, a company like Patagonia, which has made environmental responsibility a core part of its business model. By investing in companies like Patagonia, investors can support sustainable practices while also generating returns. Another example is the rise of green bonds, which are specifically used to finance environmentally friendly projects. Studies have shown that ethical investing can be a prudent financial strategy, as companies that prioritize social and environmental responsibility tend to be more resilient in the long run. According to a report by Morgan Stanley, sustainable equity funds outperformed their traditional counterparts in 2020. Moreover, ethical investing can have a significant social impact. For instance, impact investing in renewable energy can help reduce carbon emissions and combat climate change. By investing in companies that prioritize diversity and inclusion, investors can promote greater social equality. So, is ethical investing really worth it? In my opinion, the answer is yes. By aligning your investments with your values, you can generate long-term returns while also making a positive difference. It's not just about feeling good about your money, it's about using your money to create a better future. Thanks for watching, and I'd love to hear your thoughts on ethical investing in the comments below. If you're interested in learning more about sustainable finance and impact investing, be sure to check out my other videos on the topic.